Okay, so let's look at some set examples on Fibonacci applications. Remember, you don't have to use Fibonacci on ranging markets, rather you use them on trending markets. And me, I don't just use Fibonacci to know possible retracement levels or extension levels. Also, I use Fibonacci to know my key price levels, and I apply the concept called the Fibonacci confluence. So I'm going to show you on this live chat immediately on how to do this. So right now we are on the USD CAD weekly time frame, and right here we can see we are in an uptrend right here. First of all, how do you identify your uptrend? You must have a series of higher lows. This is your lows rather, and this higher highs and higher lows. You must see a series of higher highs and higher lows. So that will now qualify this as an uptrend. So you can now see this is an uptrend. So since we know that this is an uptrend and we want to plot our Fibonacci retracement on this pair, this is what we do. Come here, you see this is Fibonacci retracement. You pick the tool. Remember, you plot your Fibonacci retracement tool from previous lows to the highs for an uptrend. So you can now see on this chart now, after plotting my Fibonacci from the lows here to the highs here, you can see how it's working perfectly well. Price moves, pull back to the 78.6% level retracement level, rallied up again, pulls back 61.8% retracement level. So you can see another rally, so but if you can see very well, you notice something, that the way it's moving after 78 and now we have a 38%. So you can see how price is reacting to these levels. Price tends to turn around at these retracement levels here. And remember, I said your way you should focus on is always the 61.8 and the 50% retracement levels. Let's take a look on how to use Fibonacci to determine a key turning point in the market, a key price level in the market. You pick the tool again. You do this by drawing more than 2 Fibonacci retracement on your chart. This is the first one here. This example is for an uptrend. Later we'll do another example for the downtrend. So to the highs, then you pick the tool again, take from the higher lows, pick from the higher lows, still to that same high again. Then do we have another low? Yes, we have another low. So we pick from here. This is the next low. Pick from here to that same high. Make sure you are taking it to that same high. You are plotting it to that same high. We have done. Okay, this is another low here to that same high. So all together we have been able to plot how many Fibonacci? 1, 2, and 3, and 4. So we have Fibonacci. We have plotted 4 Fibonacci levels here. And how do you determine the confluence? Now you look for where we have more than 2 retracement level converging at the same point. More than 2 price level converging at the same point. Okay, I think I've seen one here, and they have to be very close. They have to be very close. This one we just have 2, and this is one here. So when you see one like this, all you need to do is you plot your horizontal line. And where do we have another one? More than 2, this level here, and you plot your horizontal line. And where do we have more than 2 lines again? And no, we've gotten here. There's only 2 here. I have only 2 lines here. 2. Let me confirm this. Okay, we have up to 3 here. We have up to 3 here. You pick this point. Alright, so after doing this, after pointing out those levels where more than 2 retracement levels have met, like converge, like they have met, you now delete your Fibonacci. You now delete all the Fibonacci tools so that your chart will not be very dirty, so that you can see clearly. You delete all the Fibonacci tools and you'll be left just with those lines. So you can see here, here, here are key levels. These are key levels on the chart. So that is how I use them to spot key level. So anytime price reaches these key levels, I pay very close attention to what is going to happen at that and those levels there. You see, and even from what you have seen previously, price tends to react to this point here. You can see here, see the reaction here all over this place here. See what price is doing inside those key levels. It was consolidating at that point before the rally to the upside, and right now it seems we are having the same thing here. We are seeing a consolidation. So you see how I use the Fibonacci to be able to determine key price levels. They may not necessarily turn around, but you from those levels you'll be able to know the direction of the market from there. Either it's still going to continue the trend, or it may go the opposite direction. So let's also see an example for a downtrend. So we use the USD ZAR chart. So before you always plot your Fibonacci, first of all, spot your trend. Know your trend. Make sure you understand your trend. So for this now, we can see clearly here that we are in a downtrend. This is the first high here, and we have the lows, and we have an higher high, lower highs and lower lows. This is another lower lows, this lower high and lower low. So with that already, we have been able to identify a trend. So this is a downtrend now. So that is clear, right? So let's go ahead and plot our Fibonacci. Pick your Fibonacci tool. Remember, for a downtrend, you draw your Fibonacci from the previous high to the recent low. So this is what we have here, and you can see how price is acting up, respecting those levels. This is the 78.6% retracement level, 61 level, and we had a turnaround also. 50% retracement level, we see the price rejection at that level, and right here again the 38.2 retracement level, and we got another rejection there too. So you can see how this tool is working perfectly well on trending market. So let's try doing the Fibonacci confluence on this chart and try to spot out our key levels. So we start from here, from highs, from previous highs to recent low, back to the recent lows again. I don't classify it here as a low because of this region here. So here is our lower highs, take it back to the recent lows. So at the end of the day, we have about 4 Fibonacci plotted here, and let's try to spot out where we have more than 2 price levels converge. I can find one here, so we draw a horizontal line, and where do I have the close range? 1, 2, 3. Right, this is another one. We have 3 here, and they are close enough. Okay, that is all. Alright, here we pick this point 1, 2, 3, and you plot a line, a horizontal line. So let's delete the Fibonacci tools, and we are left with just our horizontal line. You can also see by doing that, this first horizontal line here, you can see price reaction at this point here, 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 and here. So you can see this is a key price level, and you have to pay very close attention to what price will do at this price zone here. So this is how you use the Fibonacci retracement tool and determine your possible turning areas and also your key levels. Okay, so let's also look at that Fibonacci extension or expansion tools, how you can use them. So still on this USD chart, you have to come here and pick your extension tool. Remember, I said you should draw your tool. Unlike the retracement tool, on the extension tool you have to plot on 3 points from the impulse and then the first pullback. This is a clear downtrend that we have seen already. So if I'm to draw a Fibonacci extension tool now, this is my first impulse here, that is from X to A. Then this is my pullback here, the B, this region here is the pullback. Make sure you accommodate the wicks. So this is what you get. Let's just assume these other parts of the chart was not there and you plotted your Fib extension tool, and you can see what price is doing. It comes to the extension levels. When it reaches the extension levels, they turn around and go back up, then come back again, come down again. Let's make a recent example using the recent price action for now. Let's say right now we are trying to see a breakout of the downtrend here, and this is our first impulse. So here now is our first impulse. From here to here is our first impulse. So we draw a Fib tool from here, X to A, then B. These are possible price targets, but make sure once price reaches the 161.8% extension levels, close your trade and watch out for the next price action, because things may just change very, very fast. And that is how you use the Fib extension tool. It works on any time frame, any currency pair, stock, cryptos, bonds, equity. You can use them on any chart. As far as it's a financial market trade chart, you can use it on them. So let's look at an example for an uptrend. So we already know this is our clear uptrend. You know, we have seen this already. It's a clear uptrend here. So we are drawing a Fib extension tool. This was the first impulse here. From here to this point was the first impulse. Then the pullback, the first pullback stops here. So we extend the tool to this point. After plotting it, this is what you get. Remember, I said when price reaches the 161.8% extension level, you should take your final trade. And you see what happens here. Price came close to this level and we had a very fast breakdown here. You can see how fast it moved. So if you didn't take your profit, now your winning trade will turn into a losing trade. So once price reaches the 161.8% level, either on your Fibonacci retracement or extension, always pay close attention to it, because something wonderful is about to happen. So you can see after the first pullback, price rallied up again to 78.6% to 100% extension levels, up to the 161.8% extension level. So let's make a recent example of what price may likely do, because right now this is a key level. After what we did on the Fibonacci conference, this here is a key level. And what do we have here? We have a bullish engulfer here. See a bullish engulfing candle there. So it's suggesting that price may go back up. So we pick our Fib extension tool, take here as your first impulse and down here as your first pullback. So where will your target likely be? Your next target should be at the 78.6% extension level. Now if you should draw this up here, you can see how it connects. So price may go back once again to this level and break down again. So that is how you use the Fibonacci extension and expansion tools